If you add ETH to the portfolio and you rebalance periodically, like once a year or once a quarter, to reweight those assets, historically you get higher returns, similar volatility, so higher risk-adjusted returns, and a lower maximum drawdown, which is the measure of like the most your portfolio is worth to the least it's worth at the bottom of a trough. And it's an important statistic because you feel that in your gut, right? When your portfolio falls 25%. So yeah, the thing about Bitcoin and ETH is that they're not perfectly correlated, right? They have different uses. They respond differently in the market. There's Bitcoin season and ETH season. And when you put different assets into a portfolio, you get better risk-adjusted returns. When I look at what I expect from a flow perspective, and then what you referenced from a supply of ETH perspective, it's hard to put those two numbers together and not arrive at a new all-time high.
Investors are sleeping on Ethereum right now. The newly approved Ethereum ETFs are going to attract way more institutional money than people expect, and Ethereum is most likely heading to new all-time highs by the end of the year. That's what I was told by Matt Hougan, Chief Investment Officer at Bitwise, in my latest interview with him. If you want to check out the full interview, it's the first link in the description below, posted on the Crypto Nutshell. Within the interview, Matt Hougan breaks down the coming Ethereum ETFs and makes a case why investors should be buying Ethereum right now. Not only does he think Ethereum's price is going to new all-time highs by the end of the year, but he also has facts and figures proving that by adding Ethereum to your portfolio, you'll increase your returns whilst decreasing your risk. If you don't know who Bitwise are, they are the 5th largest Bitcoin ETF issuer with over $2 billion of Bitcoin held right now, and they're about to launch an Ethereum ETF. Matt Hougan is their Chief Investment Officer, so when it comes to crypto and institutions, Matt knows better than anyone. If you want to watch the full interview, hit that first link in the description. But without further ado, let's jump in with Matt Hougan.
When you put different assets into a portfolio, you get better risk-adjusted returns, and that's what we see if you look over any full cycle in crypto. Obviously, if you do a short-term look, you can find times where it's better to be Bitcoin only, or it's times to better be ETH only, because there are periods where Bitcoin outperforms and period where ETH outperforms. And if you know those in advance, God bless you. But if you want to look over a full portfolio cycle, the data shows, yeah, you want to smash them together, and you'll get a better outcome. When I look at what I expect from a flow perspective, and then what you referenced from a supply of ETH perspective, it's hard to put those two numbers together and not arrive at a new all-time high. And if I had to guess, I'd suspect that we get to it by the end of this year, but we'll have to see how that unfolds. I would add just two more things on ETH, which may be valuable. Even if you remove the ETF from the equation, there are two huge tailwinds in ETH right now, which I think people aren't thinking about. One is that we've removed a great deal of regulatory confusion around ETH, ETFs, and with just general acceptance of its role as a commodity. And as an expression of that, you can see that BlackRock built a fund on Ethereum, which holds millions of dollars, hundreds of millions of dollars in assets. And I think, so removing the regulatory cloud, I think, is a massive tailwind. And then you have the whole reason I was optimistic on ETH, at the beginning of last year, before we were even thinking about ETFs, which is you have the Denkun upgrade, which has solved the scalability problem. And I think that problem was what killed the last bull market, even before FTX sort of drove a dagger in. Fees on ETH spiking to $200 and throughput being totally jammed killed that market. I don't think we've harvested the dividends of the Denkun upgrade at all. And I think that we will. That upgrade and regulatory clarity in an ETF, then yeah, I think we get to new all-time highs. It used to be very high career risk to stick your neck out and say, I want to get exposure to Bitcoin, or I think we should get exposure to ETH. And there are periods where that seems like a terrible idea. We've all lived through these bear. And the number one thing that most people on Wall Street want to do is keep their jobs. And so you had this high risk of sticking your neck out. I think what's happened over the last few years with the approval of Bitcoin ETFs, with BlackRock, the largest asset manager in the world, coming into the space, with Larry Fink, BlackRock's CEO, one of the most respected men in finance, Bitcoin on CNBC, is that we've taken down that career risk. It's no longer crazy or extreme to say, hey, we should probably have 2.5% of our portfolio in Bitcoin in case it continues to work out. That's now okay. And so that's started to unlock this wall of assets. And there's so much money. These institutions control 80% of the world's wealth. And that all needs to get exposure to this asset space. And they're starting from a very small base. So I think they're years and years of flows.
Do you think this means the Ethereum ETFs are going to take away some of the flows from, are they going to compete with each other at all, do you think? Is it going to divert some of the flows?
I think on the margins, the answer is yes, but you're not going to notice because there's so much new money that's going to come into this space. So there will be a few people who have already made a 5% allocation to Bitcoin, and now they're going to change it to be 3.5 Bitcoin and 1.5 ETH. That'll happen on the margins, but it's going to be just papered over by the amount of people starting new allocations or who only dipped their toes in the water on Bitcoin and now are going to add ETH. I've told this story before, but I was meeting with the CEO of $100+ billion advisory network. So he oversees advisors who manage well north of $100 billion. And he didn't want to invest in just Bitcoin ETFs because it's not diversified. But if he sees ETH ETFs launch, he thinks packaging them together and having a small allocation for his firm. So I think it's going to be more of that, but there'll be some competition around the edges, just like there is in traditional crypto, right? There are competition between those assets, and then there are many of us who own both and are happy with that. In my view, it's inevitable in the future that there will be a large number of crypto assets wrapped in ETFs. Bitwise started as a index fund provider, meaning single funds that own multi-crypto assets. I think eventually there'll be lots of ETFs that own ETH and Solana and other assets all in one. I think that's the future we're going. You already see that future in Europe and other more mature crypto ETP markets. In the US, I really respect the firms that filed for Solana ETFs. I think it was VanEck and ARK or 21 Shares. Great firms, great people. My view is that's a long shot. There's never been a commodity ETF approved, not just in crypto, but anywhere where there wasn't a regulated futures market trading alongside it. There's no regulated futures market in Solana that's significant now. I just think it's unlikely. How could we get it? We could get it if we get comprehensive crypto legislation that elevates the regulatory status of exchanges like Coinbase. We could get it if we get a change in the SEC and a more accommodative view from US regulators. And we could get it if I'm wrong and the smart people at those firms are right, which is entirely possible. But my own view is it's low probability until we get new crypto regulations or a change at the SEC or other market developments. But in a few years from now, if you have me back on, we'll be doing with a sea of ETFs. Crypto will be mainstream, and there'll be a lot of fun things to talk about. So even if you go back to the gold ETF, it's a gold bullion ETF. It holds gold bars, but the SEC was only comfortable approving it because there was a gold futures market that was regulated, and it could look at that futures market to see if the market is being manipulated. In the case of the Bitcoin ETFs, there's Bitcoin, which is not fully regulated the way stocks are, but there's a Bitcoin futures market, and the SEC can keep an eye on that market and see if it's being manipulated. When you get to Solana, there's no regulated Solana market yet of any substantial size. So you don't have this sort of pathway to view a regulated market. And that's why it's a challenge. Again, it doesn't mean it's impossible. There are other avenues for approval. This is not a hard and fast rule. This is just what history shows. And that's why I'm not saying it's impossible that these ETFs will be approved. It's just why I think it's a challenge or a low probability event. But you have to blaze a path if you're going to walk down it eventually. So kudos to those firms for blazing that path. I think any new and emerging market, you're going to see people take shots on goal. I think those models have been helpful in people in understanding the market. I don't put much future predictiveness into those particular models. I tend to look at Bitcoin from two perspectives. From a long-term perspective, I sort of take a total addressable market model and think about the size of the markets it's attempting to disrupt to generate long-term price targets. In a short-term perspective, I think momentum is a massive factor in Bitcoin, and you can do a lot worse than looking at short-term momentum trends too. I think they're relatively predictive over a short period of time. So I like all those models. I like sort of the Metcalfe network idea, and I look at all of them. I don't ignore them. I think they're valuable inputs. I just think they're imperfect inputs. But at this stage in the growth of Bitcoin, imperfect inputs are all we got. And you just need to look at everything and sort of smush them together to get an accurate worldview. I think when I look at the two successes I've had in my career, one building in ETFs, one building in crypto, the things that unite them were that they were really important technological. The ETF is effectively a technology that many people were skeptical of, right? Many people were skeptical of ETFs when they launched. There were congressional hearings about them destroying the American dream. They were labeled weapons of mass destruction. But I saw sort of the efficiency of that technology. Same thing is true in crypto. Like, crypto is this incredible technology, does incredible things, and people are hugely skeptical of it. So the advice I would give would be to find something that a lot of people really dislike because they don't understand it, and focus your career in that space. I think that's where all the alpha in the world is. And then once you find it, just work really hard at it. That's, I think, what I would say. That's the magic combination of a powerful thing that many people don't understand and therefore dislike. That's a beautiful place to be.